I've switched computers basically, so I'm just getting the platform loaded up on this particular computer. Before we get to that stage though, in terms of what we're dealing with this week, the big themes for those of you who attended last week, pretty much the same. We're still looking very much at a Trump reflation trade situation, Fed rate hikes, Brexit, European elections, still very much all on the table. We've got a bit more detail on Brexit now because you can see that's actually not this week, strictly speaking. We now know that it's going to be next week when it gets triggered, although obviously we know it's coming, and so far the reaction in the British pound has been a positive one. So perhaps the removal of uncertainty about a particular date for Brexit supporting the pound a bit. And you can see here that we've got the UK inflation listed here. That came out earlier today. I'm sure any of you who've been trading today saw a big jump up in the pound. The FTSE's rolled over a little bit because of that strength in the pound, because the inflation came in much stronger than expected. So, you know, that's a general rule of thumb when you're trading data. Obviously, the higher the inflation, the increased likelihood of rate rises. So high interest rates attracts people into that currency, and that's what we're seeing in the pound at the moment. Of course, the Bank of England may not raise rates very quickly, but it seems pretty unlikely that they're going to cut rates or do extra QE. They look, you know, I would say if anything, they need to stop doing quantitative easing fairly soon. So that could come as early as the next meeting. So all of that's quite positive for the pound, but as I'll show in a minute, the pound against the dollar is still pretty range bound. We've got more UK data later on Thursday. We've got UK retail sales. That's coming out on the Thursday, and you know, this higher inflation and is now at, I should say, inflation now at 2.3% year over year is now at the same pace as wage growth. So basically, real wages are now flat because of this inflation. So that doesn't bode particularly well for us having extra money in our pocket to go out and spend. So we may see over the coming months, and already been a bit of a sign of it, that retail sales are going to start turning lower. So given that the pound is the strongest, well, I forget exactly how many days, we'll look in the chart in a minute, but close to the highest in a month, you know, some soft retail sales data could remind everyone the problems of this higher inflation we've just seen. So that's a risk to further gains in the pound coming on Thursday. We've got European manufacturing and services PMIs. You know, that's probably not going to immediately move the market, but it will create a sense of the European economy being fairly strong. And similar situation in Europe, where inflation's on the rise and the ECB got very easy accommodative monetary policy. So you know, they need to scale that back really, and that's a positive for the euro. We've seen the euro pushing higher as well. And US durable goods on Friday, and a few different earnings to deal with too. I won't go into detail on the earnings, but certainly something to have a look at. Okay. Should mention, of course, any any questions at all, you know, please please just let me know at any point, and I'm happy to answer. Now, as a result of these technical gremlins, the platform's not set up as I normally have it, so bear with me. But it does have the main. Let's have a look here. It does have the main popular markets, and they're the ones that we mostly deal with. So starting with the euro, we're on a daily candlestick chart here, and this is what we've been highlighting for a little while, is that a potential for a inverse head and shoulders pattern here, and so that's kind of, you know, very much what we're looking at. We're at the neckline. We've been talking about that even when we were hitting 105. You know, we mentioned it again in snapshot videos when this resistance down here was taken out. And now we're up, and this pretty much is the neckline here. So this 108 in euro, 108 to 108.50 probably is a pretty big line in the sand for the euro, and it wouldn't be a surprise to see us turn lower here. One thing to make me a bit more positive on the euro, and indeed on the pound, we'll see that in the next chart, is that we're sort of, this bullish action from today is unwinding the potential kind of bearish pattern that we saw into the resistance area last week. So that's one of the best, you know, unfortunate if you took the bearish signal at the resistance, it was a fair enough trade. But once that trade gets unwind and it pushes through into new highs, you've got to change your mindset and think, okay, so we're moving from a drop from the top of the range to a potential breakout. You've got to change the mindset, start looking to go in the other direction. So that's what we could be looking at here. Obviously, you can get two false breaks, but it's looking positive at the moment. It's looking like this euro strength could continue. I say euro strength, there's certainly an element of strength to euro to it, but it's a dollar weakness too. So if I load up the sterling chart here, then you can see this is obviously on the short term. This was the move pre-data. Now obviously you get you know, you get people saying that the data's been released early. It could have, you know, I'm not completely dismissing that idea, but there was also a technical breakout going into it. So if you had the hourly chart loaded up, maybe you're aware of the general context that we're in a decently sharp uptrend in the time being. If we zoom out to a daily chart, obviously we're in a range. This is the same kind of range that we've been talking about for a while. It was these post flash crash lows, and then the top here around 127 has been our pretty well defined range for a while. And it sort of looks, you know, in a very simplistic way that we're pushing from the bottom of the range up towards the top. Now obviously we can roll over before that, but that's kind of our base case scenario here, is that we're sideways, and then once we're at the top of the range, then we start assessing the likelihood of a breakout and a bottom pattern. We're certainly not there yet. Obviously a lot of Brexit uncertainty. I don't think it's going to be a straight route higher by any means. As I mentioned, we've got that data on Thursday. So I haven't actually checked for any Q&A yet. Let's just have a quick look here. So yeah, okay, yeah, as I mentioned, yeah, feel free to fire through any questions. Happy to answer them. But as I was talking about before, here, you know, this was a kind of decent reversal pattern. We had you know, this support in here, I believe that was the level, as a sort of choppy area of support. We've got that kind of turned down low on Friday, and as I mentioned before, we basically put a bullish engulfing pattern on the daily chart surrounding what is a kind of soft-looking shooting star bearish reversal on Friday. So the bullish pattern enveloping the bearish pattern is generally speaking a bullish sign. Now if we switch gears to dollar yen, also here you can see that pretty much we're in a sideways range. Now some people like trend lines. You know, I found them to be a bit unreliable over time, and this was a good example of where it didn't quite pan out. We had the trend line through there, three touches, a fourth touch, a break, but we rolled over. And really it wasn't the trend line that people had an eye on. I mean, they obviously did to some extent, but not as much as just quite simply a horizontal resistance in there and the corresponding support through the lows. So again, we're in a sort of sideways range, and we're approaching the support now. The support's around 112. So if this range is to be maintained, which has to give at some point, but our default assumption is it's going to hold for the time being, we're expecting maybe some reaction in the 112 vicinity. We're around 112.50 at the moment. But longer term than that, you know, it's a little bit hard to pick a direction. fundamentally, something we've been talking about is that the Bank of Japan are targeting a 10-year yield in Japanese treasuries. If yield creep higher than their target, they may have to adjust their target higher. What does that mean? That would mean that people can get higher interest rates in Japan. People are going to want to hold more yen. That would be negative for dollar yen. So just looking at this weekly chart here, obviously it was a huge surge to the top side, but we did have a big drop preceding that. So potentially this big surge that we had to the top side in the dollar was a bear market rally, and actually we're about to turn lower again. Even if that's not the case, maybe this is just the first leg of a correction which goes a little bit deeper into that rally higher. So perhaps if we were to have a bias, it might be a drop to the bottom side, which obviously goes counter to the idea that the Fed keep raising rates, but our kind of idea here is that the other central banks need to catch up with the Fed, and that will probably happen quicker than the Fed, in fact, themselves hiking rates at a faster pace. So let's switch gears to the indices. If I load up the FTSE here, the UK 100. Here's today's action. As I mentioned, as the pound jumps like that, FTSE typically rolls over. A lot of the reason for the FTSE strength has been weakness in the pound and how that helps company earnings. So here's the bigger picture. Obviously, a pretty clear uptrend on the daily chart. Now you can hardly, again, you can draw yourself in a little trend line here, but it's holding nicely above the moving averages. If I just add a couple to the screen, let's think about what I'm doing here. Okay, true. We talked about that false break before in a previous market snapshot video, and we're pushing into the highs and we're just consolidating for a couple of days here up at that 7,400 mark. So it remains to be seen if this is a bit of distribution at 7,400 or in fact people accumulating for the next leg higher. It's not made massive inroads above the previous peak, and equally here we've not gone, we've not really gone too far past the previous peak, so it's a bit of a slow burn of an uptrend, but nonetheless it's still an uptrend. So I think the idea here would be to look for opportunities to the long side, but be aware that these rallies don't seem to last too long, so it's turned a bit sluggish. And if we switch gears now to Wall Street, okay. Pretty clearly an uptrend. I mean, this is always the key, isn't it? Just look at the daily chart first, and do you really want to be selling this? Maybe over the long haul, but how high is it going to go before you get to that selling opportunity? For short-term traders, the flow is still very much to the top side in most of these equity indices. I highlighted on the obviously on my platform, there's a few things that I had highlighted ready. I don't have it on here, but if I show you, this was a false break to the top side here. So, if we were in a really strong down, here's the correction, break to the top side, you expect that to follow through, but we haven't. We failed here at that same line again, and we're kind of struggling down at the lows here. So again, it's not really an opportunity to sell necessarily, but it's the market's not making its move to the top side just yet. And we saw a similar thing here with this little move. That was a false move to the top side. Even down here, up here, we haven't got too far. So again, we're looking for breaks, but they're not working at the moment. Okay, so I've got oil on the screen here. Obviously, we had that massive drop in oil the week before last. We stabilized last week, but our sense here is that we're in that sort of shifting kind of uptrend. So down at this trend line, potentially some support here. the outlook is generally positive for oil, but obviously we're in this consolidation for such a long time that the fact that we broke to the downside now, I'd expect there to be another leg down. And again, we've got the rising trend line, but also maybe better to be aware that we've been sort of close to horizontal for a while now. This was the big level to break out, didn't the first time, struggled, and we're down again. So there's a possibility that this downtrend continues down to maybe test this big bottom over here, which has sort of implicitly been a bit of a pivot point, which is around 45. Why would it do that? Well, OPEC, I don't think, are likely to cut output anymore. They've been a bit slow in complying with the existing cuts, and US shale production keeps expanding. So there's still a bit of a supply glut in the market, and it looks like it's going to take a little bit longer for that supply cap to be that supply glut to be undone, and supply demand to be on a better footing for higher prices. And finally, this will be the last one, just having a look at gold here. Obviously, any other requests, please let me know before we wind the webinar down. So gold I've mentioned before. I mean, well, let's even go to the weekly chart, because it's a bit of a mess. There's not really a very definable trend here. Gold does. I don't know if any of you use Fibonacci's, but gold respects Fibonacci levels pretty well. So it stopped down here at the 76.4 pretty nicely, and then I believe this was the 61.8 of this decline, more like the 50, I suppose, in between the 50. I think it was, maybe if you use that, I think with Fibonacci you can kind of adjust it to make it work. But there's a 61.8 since that decline here in and around the election. The election high, the rebound we've just got to was a 61.8, and I think even at the moment we're dealing with a 50% pullback. So let's have a look at that. Maybe I'll drop down to the daily time frame for that. There you go. So we've rebounded off to 50% or thereabouts at the moment. So it's it's not showing massive directional tendency. It's moving in one direction big, and then it's correcting it, 50 to 76%, and then going the other way again. So it's very difficult to call a direction. The only thing I would say is that we're perhaps a bit more cautious on the dollar. That should be positive for gold. Typically trades inverse to gold, and if there are any European election upsets, Brexit causes some unexpected surprise, and obviously gold is the kind of inflation sort of safe haven that people want in their portfolios. It's creating that sort of underlying demand for it. Okay, so apologies again for the technical glitches at the start. Thank you for bearing with me, and I hope that was useful. Good luck with trading for the rest of the week. Jasper signing out.